Hello to all traders and welcome to this week's market science video on US indices. We're going to have a quick look on the US index itself as well as the Nasdaq this week. Before we go into the charts, however, I want to give you a quick update of what's really happening in the markets. First of all, we've had the nomination of Amy Barrett on Saturday for the vacant seats in the Supreme Court. Now, that seems to suggest that all hopes for a fiscal deal now have finished, have ended, and most likely we're going to have quite a few turbulent weeks ahead of the presidential and actually run into the presidential election, with also the first presidential debate due this week. Is going to be quite an interesting one to watch. Now, the economic calendar is quite light this week, so we would really focus on what's really happening in geopolitics and politics, of course. Now, that includes US-China tensions, and since I mentioned US-China tensions, let's just go to the US TikTok ban that Trump wanted to actually ban TikTok with Google, also Apple. We were expecting actually to remove the app, but last minute, a judge blocked the store ban on TikTok, and that might actually support a few stocks. Just to name a few, Oracle, for example. When we talk about geopolitics now, we also need to take into consideration the Brexit, right? What's happening between EU and UK? Well, there is hopes, apparently, that a deal will be struck. Obviously, we still have time to see what's really happening, but we're actually reaching the final stages of the negotiations, right? And until the 31st, which is the deadline, December, also turbulent months until the end for the pound. Or until at least there is some sort of clarity, or if they finally agree on a deal. Now, at the same time, then the Scottish independence referendum is revived again, as Nicola Sturgeon has pledged to publish a draft legislation for a new vote before the next May's elections in Scotland. Now, at the same time, coronavirus cases worldwide increasing. Many in Europe, actually, they have been quite reaching new highs in terms of the exponential increase of numbers, right? For example, it looks like the second wave is much bigger than the first wave now, particularly in the UK. And all that while most of the financial services providers and bankers in the UK starting to look for a way out, so they won't have any problems with visa restrictions and free trade when UK is finally outside Europe. Now, starting with the index, we talked about this scenario for a while. We're expecting wave 3, then 4 and 5. We've had a nice ending wave down here in D3, right? And we went into a, as you can see by the numbers, actually, we went into a expanded flat, right? And that means to me that this is 1, 2, 3, 4, and 5, right? And that being a triangle. I'll be honest, I don't really like this wave 1 because it doesn't, this move to the upside looks corrective rather than impulsive. However, do not forget that wave C of an expanded flat is a 5-wave move, right? So although we've reached those levels, we've actually very, very, very effectively reached the 94.77, which is 61.8 from a nice extension of waves A and B. And at the same time, it's a nice cluster. If we take wave 3 actually into consideration, this is the 50 Fibonacci retracement as well. So this is a very nice cluster for me, right? So the question is, are we going to move lower now and go and take the 100 Fibonacci extension of waves 1 and 2 around 90.46? And this is where we are looking to end wave 5, of course, right? Or are we going to move higher, right? Because of the structure of this last move to the upside. Well, mainly I'm supporting this scenario, but in case we move higher and we break above that swing high, yeah, most likely then we'll be looking for that pattern to be an ABC down here, right, for a wave X rather than an impulsive move to the downside. And that means that we've had wave A done, and we are now in an A, B, and a C pattern. We could take us, I mean, it could have just finished here, or we could go up to the 38.50 or 61.8 Fibonacci retracement of wave A so far, right? I mean, A, B, I mean, the first low, right? The other level, of course, to pay attention to would be, if we take wave B, right, since we've done the 50, would be the 61.8 Fibonacci of wave A, which is around 95.48. Pay attention to what happens really at the current highs. Yes, if we break, most likely there is no expanded flat. Now, let's go NASDAQ. We haven't looked at that for a while, and that's why I want to go a little bit further back. Let's go on the 8 hours so that you have a quick look at what I'm expecting. 1, 2, 3, 4, and 5, right? Now, look at this. If we take the Fibonacci extension, yeah, of waves 1 and 2, we pretty much reached the 161 extension for wave 3, right? Which is around the 1300s, and then we'll move down for wave 4. And we have actually just bounced at the 100 Fibonacci, which is usually a very good support level to consider to start actually paying a little bit more attention to whether we'll get a break or not, because bounces normally, the 100 Fibonacci, indicate another move to the upside to potentially take out this, because we missed it in the first stage, right? So it could be a 3, and then we could have a 4 and a 5, or this could indeed be the 3, then this is the 4, and this is the 5. This scenario is looking for more upside, and this is where wave 5 is going to finish. And this is also cycle wave 1, by the way, right? Now, the other scenario, I'm actually looking at this one as well as my favorite one, right? This is the main scenario for me, is that this is a leading diagonal in cycle wave 1, right? It looks so nice, to be honest, right? So what happens here is that we've had an impulsive move to the upside of a wave 1, a wave 2, a short wave 2, then 3 and 4, and a 5. And here we took out the 100 Fibonacci extension of waves 3 and 4, right? Which is where 5 is expected to end. So the 1250 here acted as the rejection level. And now it looks like we're moving into an impulsive move to the downside for wave 2, right? So that means that the first level I will be looking to break is the 1029, right? This is wave 4. It could be because usually we'll have 1, a 2, and then we'll go down for wave 3 around the 2, and then 4 and 5. That would be A, then a B and a C for wave 2, right? Now, if we go a little bit further down, we're looking here at wave 1, wave 2, yes. This is a wave 3, this is a wave 4, and this is a wave 5. 4, flat, yes, and 1, 2, 3, 4, 5, that's an ending diagonal. And then this is 1, 2, and 1, 2, 3, 4. We're going to see another one for A, B, C, or, and then we move lower for wave 3. Or we could see that, well, being an A, B, C, which is an A, then we're going to see a B, and then we're going to see a C. This is going to be a simple zigzag, right? So either impulsive or corrective, but we're still looking for prices to move to anywhere between the 1134 and 1176 to take out that correction wave 2. In case, of course, we continue above these levels, then potentially we go back to the previous scenario where we're going to continue higher for wave 5. Okay? So, guys, if you like the video, hit the like button. If you have any alternative scenarios, any comments or any questions, do not hesitate to comment on this video, and I will get back to you as soon as I can. Thank you very much for watching, and have a good trading week ahead.